Yeah, all right, there we go, guys. How are y'all doing? Hi, I'm Chris Freaks with Texas West Capital, and it is Friday, the 1st of October, 2021. And I'm coming to you live from beautiful Bernie, Texas, in the wonderful Texas Hill Country, guys. I tell you what, if you haven't been in this area, make it a plan sometime. Absolutely gorgeous out here. A lot of really friendly people. And guess what? Not too far away from San Antonio. It's right down the road. So if you need to get that big city fix, there you go, right? Excuse me. So, how's everybody doing here? I've got Hank checking in. Bianca, hello. Good to see you. Mark is here. Common Man. Let me see here. Who else is here? Just in time. He says, entering markup? Yeah, we'll take a look at that. Boris, what's going on? Claudio, always good to see you checking in, my friend. Brian Riley makes it a part of his week to be here. I love that. Telluride, what's up? He says, Texas Hill Country is great. Great memories there. Yeah. Of course, so are the mountains up that way as well. You know, Telluride, Jackson Hole, you know, when you're hitting Colorado into Wyoming, and they're into Montana as well. Real gorgeous area. Even some really neat places over there in Utah. So lots of great places to visit over here in the U.S., guys. If you're here, man, you know, life goes by so quickly. Get out there and explore a little bit. Have a little fun, you know, create a little bit of memories. I know it seems so difficult to do these days, especially if you're working from home. Seems like you're always on, right? Your bosses always expect you to do more. Much more than they ever did while you were in the office, right? But you have to make it known, guys. If you're working like that, you've got to make it known to your boss that, you know, work hours are work hours. You're not available 24/7 just because you're working from home. And then take that free time, guys, and go create some memories with, you know, by yourself or with special people in your life. I'll tell you what. It's you guys got to do it. You can't sit in front of the charts 24/7. I keep telling you, man. If you're going to be traders, just treat it like a job. Treat it like a job, guys. If you're always worried about missing the next big Bitcoin run, I had this discussion with one of our members the other day, yesterday, I guess it was, and I suggest, you know, hey, listen, if you want to trade, but you're also worried about missing those Bitcoin runs, you know, that's going to interfere with your trading. Allocate a portion of your capital to an investment side of it that you don't touch. I mean, make sure you understand where your stop loss is on that. You have to have stop losses on investments, guys, because anything can happen. And there's no reason to get in there with this investment and go up, and also have some flash crash kind of thing happening and taking you out, right? Or just, you know, some long-term bear market, right, that you don't need to be a part of. So take a portion of your capital, stick it in investment side, and just not touch it. And then you can trade without all that overhanging, oh my gosh, I'm going to miss out on the next big Bitcoin run thing. You can do that, but don't trade that don't trade that investment account. That's meant to, you put in money there and you put it in as you see it, and you don't worry about it. You know, I started mine with Bitcoin back in, you guys know, I think back in 2017, in January of 2017. And then I've added on to it, you know, as time goes on. And I've got a stop loss set on it, but, you know, we're obviously well above where the bulk of the money went in, which was at the bottom there at about $1,100. So, you know, do that. And then that way you can trade without having that overhanging fear you're going to miss out on those Bitcoin movements, guys. That should help you a lot there, doing that, okay? But don't trade the investment account, guys. Do not trade that. That's meant to sit there and you know, withstand the highs and lows as it moves on. Let me see here. What's up, Common Man? I see you checking in there. Let me see. Who else is here? Kevin, you're checking in from San Antonio, man? Hey, great to have you down here. How'd you like that rain the last 2 days? we had some crazy rain storms there, I think, a couple of nights ago. And as I was doing the evening Bitcoin update for our members, before I could upload it, right after I recorded, but before I could upload it, the power went out. It was crazy lightning and thunder out of there. Then we had a little bit of rain last night. So we can't complain about that over here, that's for sure. I'll always need that rain coming in. Hey there, Michael. Good to see you checking in. Data as well. Let's see here. Telluride says, although I have a different definition of hills than he does. Hey, it is the Texas Hill Country, not the Texas Mountain Country, right? Oh, let me see here. Crypto Surian, good to see you, my friend. Nevlusian checking in. Leighton checking in from a sunny London. Always good to hear it's sunny out there. Wind is here as well. Oh, yep, there goes Kevin. Says, nice day in San Antonio today. Got his breakfast tacos. Man, I'll tell you what, if you come down this way, Austin or San Antonio, man, or anywhere in Texas, make sure you're checking out them breakfast tacos, man. That's the way to do it. And if you really want a treat, and you're down here in this this whole San Antonio Austin corridor, look for the food trucks out there. Get some street tacos, man. That's good stuff right there. Hey there, Andrew. Happy October to you as well. It sure did kick off good, didn't it? Kimozabi checking in. Man, everybody is here. This is often. Awesome. Texas often autocorrects to taxes. That is funny, right? And that's right, man. What's the point of making money if you don't enjoy it? That's exactly right. That's exactly right. Hey, guys, as I've told you before, keep watching for TexasWestCapital.com. Stick it in your favorites. We're going to have a new site up pretty quick here. We've got, oh God, man, we got so much great stuff going on. I've been telling you guys that this was coming up here in Q4, bleeding into next year. And so, man, we've already done some new stuff. We're actually, get this, guys. Okay, so we've got a new back end coming in to help us manage our memberships and everything. But this new back end is going to allow us to also release actual courses for you guys. So all this stuff that we do, all this education and stuff that we do is going to be available in course format, which means, quizzes and certificates and all this great stuff. But also, what we're going to do is make it available. Sometimes people get in here and maybe they don't see, a desire to be a part of a community. It's for, every man for himself kind of thing, whatever you feel like. But, you still want to get involved in the education and all that. Or maybe, maybe it's a bit much up front, to put it in for the community and everything else. So we're going to actually be making a lot of this course stuff available separately as well. So hang on and be looking out for that. That's exciting stuff. By the way, if you are a current member right now, Tier 3 is where it is. It's where the place to be. Get you access to everything. So the courses we release are going to still be accessible to our Tier 3 members. Tier 2, you're still going to get access to what you can get access to. But the educational stuff in there is going to be in the format of this new course stuff. And so that means we've updated the videos, added some new information in there. Kind of made it pretty great, I think. So anyway, yeah, that's that stuff coming up, man. So much other new stuff. Don't forget Alpha Trader. Don't forget that, okay? I'll be letting you guys know about that probably here in a few weeks. So we can check that out as well. By the way, guys, hey, listen, catch up with me here at the newsletter there. That goes out every Monday morning. It's free. And it's my attempt to help you guys become more, to understand more about the macroeconomic side of everything, the global financial side of everything. Like I said, each week we kind of I usually kind of take a theme based on what the news is. So we've looked at, gosh, just last week we were talking about the debt ceiling and what that means. Kind of took a look at some of Jerome Powell's comments at the latest FOMC release. We talked about the week before, I think we were talking about world reserve currencies, China, Evergrande, stuff like that. Before that, we were talking about reverse repo, dollar liquidity. And if you read each one of these newsletters, guys, they all kind of bleed together. They all kind of come together to give you a greater understanding of why money printer goes bird does not make any sense. Oh man, I'm like on this just on this, I don't want to say rampage, but I'm on this quest to remove that nonsense from social media. And so I'm doing what I can to help get that out there because man, oh man, it doesn't hurt at first, but when things come to a head and, if that's something you're still going on, it's going to hurt you a lot in terms of the market. This lack of understanding of what's going on. And so, yeah, man, lots of stuff in there. Hopefully getting across to some people. What's going on, Eureka? Good to see you there. Lukenbach, Texas, Telluride mentioning, yeah, man, right up the road here. Gosh, probably about not quite an hour up the road, I think. Little hole in the wall town, little just pull off the side of the road kind of thing, but pretty cool little Texas thing. Let's see here. Kalachi's Brian says, yeah, see, y'all know about Texas. Look at this. You guys know what's up. Kevin says, great to have something other than hot and humid down here. I agree, man. I agree. But, part of that humidity is because we have the water around here. And, I'm not going to argue a whole lot about that. Rivers to float, lakes to go play in, ocean just down the road, Again, took the family down there to Port A last weekend. Enjoyed the beach area down there. So, good stuff. Good stuff. Let me see here. Is that AOL? It says DXY dropping, Bitcoin pumping. Yeah. Yeah, that's what's going on for sure. We'll see how long that goes on for. Patrick, what's going on there as well? Hank wants to know if it's too early for the mandatory mid-80s reference. I think it's actually probably really late for that. You probably should have had the mid-80s reference in 1980. Yeah, no, I'm terrible at jokes and whatnot, guys, right? Anyway, so if you want to join us, you can join us right now at howtotradetowin.com. We'd love to have you there. It's all going to be integrated together, so no worries if you join now and, oh my gosh, you won't be able to access the other stuff and it'll be whatever. Nah, we're going to just, migrate everybody, and then this will redirect right to there. And so it'll be easy for you guys to do all that. But it allows us so much more flexibility in what we do and things that we can offer. So I'm pretty excited about all that. That's howtotradetowin.com, guys. And here is that Bitcoin chart. Excuse me. Andrew says lives in SoCal over there, looking at Georgetown. You're looking at moving to Georgetown over here? Everybody from California coming to Texas. Well, or Florida. I think we're the better place to be, but that's just me. Personal preference there. So here we go, guys. I do these multiple times a day, these updates for our members for Bitcoin. And so yesterday morning's update mentioned 3 different levels that if we got a breakout, where they might go, right? And so as we got into it, here was one of them where we got the pause right here, right around that 44,900 area. And then this area right above the R1 pivot up here was the third target. We had a first target below here, second target on the breakout, third target up here. And so as you can see, that's kind of what we did. Now, depending on what chart you're looking at, this is where it gets kind of silly sometimes. With the Coinbase chart here, you can see that you've got this drop down below this swing low over here. I'm sorry, below this swing low over here, but it stays above this wave too, right? So this is the count I'm going on here because that's what it has. But what I've been telling Discord here is that, listen, we're probably going to get a rally up toward this resistance here where it's going to consolidate, or it's going to pull back and consolidate, and then it'll break out. Last night I said, okay, we might have a 1, 2, 3, 4 and like an ending diagonal here, and it pulls back and goes out. But as I've been saying all week, if we were to break out, this is kind of like where we were looking, right? So it did good. It got there. We did what we needed to. I've got this as a 1. Well, let me kind of roll back here a little bit. I got this as a 1, 2 here. And then we've got a 1, 2, 1, 2. Okay? And so this 1, 2 here gives us this wave 3 right here. I believe it's topped out right here. Now, wave 4 may or may not come back here 38.2 toward this, retest the resistance as support. It may not. And wave 3 may not be done here. This, when you have this strong move up and it kind of just consolidates here, it can either just pop up a bit higher, this being a wave 4 of 3, and then it goes up here to finish wave 3, or, it consolidates for a bit and then it drops back down. Because what you have after a big move like this is everybody and their grandmother starts entering here. And so those who were down here are selling into you in this point. But there's so much FOMO coming in that people continue to buy up all that volume that's coming in. And as you can see here, that's exactly what's going on. Look at the volume down here, as we were down in this area, how it's low down here. And then look at how volume has remained pretty high here once we broke out here and continued up. So we've got a lot of volume going on there. We got a lot of supply coming in that demand is eating up at the moment. But we'll see. You know, again, this is a big move up. Often this results in a pullback, right? So right now I'm looking for this wave 4 to maybe come back here around that 45,000, 45,100 area. And if it does, that'll give us a minimum wave 5 up here at 49,967. You know, and it's that close to 50, so it might hit 50, you know. But that would just give us the wave circle 3 here. And so if we actually measure these things out, we can go, okay, well, this is 1. This is 2. And as you can see, we basically hit the 2.0 extension of wave 1 here. Solid wave 3, very solid overextended wave 3. If it follows the wave count that we've got going on here, we get this at this exterior wave 1 and 2 right here. Notice our wave circle 3 target is just above the minimum expected wave circle 3 target, which is 49,818, and so it's up here 49,967. So a lot of confluence in these targets, which is good, and that's what we want to see. If it breaks out above wave 3 here, we can look for a rally up toward this same target, this 49,967. So whether it drops down here and then goes up, or whether it breaks out from right here and goes up, and either way, I'll be looking for this kind of target area here. But you know what, guys? Guess what? You don't even have to worry about all that. If you're already long, guess what? We broke out of this large descending channel here, this bear flag, or I'm sorry, bull flag here. So based on the height of that, we've got a pattern target up here at around 54,656. So if you're concerned about what's going on here and you're not sure if it's going to break out or come down or whatever, look, you've got this target up here. We broke out through this long, you know, this is a longer term descending resistance here. It was about a month long. And we broke through it on high volume and large candle spread. So that indicates that this most likely will remain support, and we should continue up higher. Just basic, you know, price action and volume movement there. So even if we did, again, pull back toward here, my expectation would be that we would find support in this area and head on up. Let me see here. Andrew says, Chris, you called the pump from the breakout of the down wedge. Nice call. Yeah. So that was the other thing. I was just about to get to that. So the other thing we've been looking at is, you know, again, guys, by default, I draw these channels, right? By default, we have these channels. But often within these channels, we'll have wedges. And so I mentioned also to Discord that we had this right here. I might have mentioned it to you guys earlier this week on the other live stream that we did on Tuesday, Tuesday as well. I think I might have told you all as well. But let me kind of make this a little bit easier to see here. And so we had this descending wedge. And I said, if we get this breakout here, I said that gives us a descending wedge target now. And I'm probably going to be a little bit off here because I'm just pulling it real quick. But more or less about $8,300, $8,400 or so, like that. And as you can see here, that pretty much gets us up here with this wave circle 3 target right there. So I've given our members a lot of different ways to look at this. Some things to watch out for on the shorter time frames. But as you can see, these targets are pretty well formed and heading up there. So it's good. It's been a good push up here. You know, everybody was thinking it was going to continue down over here as we neared this swing lows here. And I'd given possibilities that if it does, this is what we would look for. But I said, until you actually get that breakdown, I said, here's this other count that maybe kind of sets us up for something different, right? That maybe sets us up for some bullishness here. It gets down close to the swing low down here, right over here. And everybody goes out, right? Everybody gets out because, oh my God, it's going to continue down. And then you get this large pump here, this bullish engulfing. And then everybody jumps in up here, and then it pulls back, and again, real low here, scares everybody to go short again. And look, another large rally off that. Don't get caught in these areas, guys. And the one way you can do that is by becoming more accustomed to the markets, getting used to them, understanding why they move the way they do and how they move. Sorry, I've got my mustache here tickling my nose. I apologize. Because the last thing you don't want to be that person who sells here buys here, sells again down here, buys again here, and then potentially sells here. Now, if you bought here and you held, you're good. But then again, then you become that person that buys up here, right? And again, that shows up here with all that volume. Now, again, on the 4-hour here, you can look at these last two 4-hour candles, guys. Large, extremely large volume. Excuse me. Told you, man, that mustache getting at me. Extremely large volume compared to what it was previously here. And very large candle spread compared to what it was. But then look at this next one. Almost the same amount of volume. Look at how close it is. And look at completely different things. So demand completely in charge here. Supply is starting to show up a bit. Now, that doesn't mean it'll go down. As a matter of fact, we're sitting above the R1 pivot. So there's a possibility it could continue to go up, which is why I mentioned that if it does, we've still got that higher target there. But, people might get excited about this. Price is hanging around the pivot there. It's got support. I'm going to go long on that. Rather than waiting for some sort of confirmation. They're just going to enter right in this area here, unfortunately. And then price will drop back, and either they're over leveraged on the size of their trade there, and so they'll get liquidated, or they'll have to exit. They'll have to cover that short before they get liquidated, which means they just lose money for nothing here. Or it'll pull back, and they're not over leveraged, but they're going to get scared because it's going to make this potentially this bigger pullback. And then they'll sell anyway, again, at the bottom. It's the same thing that happens here, right? So look what happens here. So you get this drop here, and it goes up, and it pulls back here, and people get scared because they go, oh my God, it's just low here, and here we come again with this big candle, and they sell, and you get this large bullish engulfing. They buy again up here, they think it's going to go up, and then it comes back down again to their previous low, or a little bit spiked just a tad bit below it. Scares them again. They sell at a loss again. Rallies back up, bullish engulfing. They jump on that again at the top there, comes back, guess what? Scares them again. Sell again. Here we go up, and then they should buy in this area, but they've been burned 1, 2, 3 times. They don't buy here, and guess what? It goes up without them. And then it gets up here, and they're like, man, look at all this move and all this. I missed it. I need to go. This huge candle, huge volume. It broke out. We need to go up, and they go long up here. And then price potentially comes on back down here, and they freak out, and they get out again. Guys, let me tell you what. You may have a little laugh at what I'm saying here, but seriously, if this hasn't happened to you, consider yourself fortunate. This is what happens to most amateur traders. That's exactly what happens here in this process. And so my goal and what I do with you guys here, even with these free streams here, is just to hopefully give you some sort of true north, give you some sort of understanding of what's going on so you don't get caught in here. Now, this is the stuff we work on all the time in Discord, especially if you're tier 3. All the time, practically every day. From chart requests to chart critiques, I'm always explaining everything and to a great degree so that our members, not just those who ask, but also those who are reading, can get an understanding of what's going on there. The idea, guys, again, I take it seriously that you come to us, and I try and do everything I can to help you understand. Now, at the end of the day, I can't force you to understand. Not in Discord, not here, okay? It's up to you to have the open mind and the willingness to say, you know what? I don't know what I'm doing here, but I really want to learn so that I can know what I'm doing. Unfortunately, most new traders never do that. They never get to that point. They don't. And it's sad because whether you do it or not is up to you. You have complete control over whether you can be successful or not as a trader, guys. You do. But many of y'all, you get caught up in this whole, oh, I need to make money tomorrow or yesterday or whatever. I need to turn this $2 into 200 million yesterday, right? And when you think that way as a trader, guys, it gets you to lose a whole bunch of money because you end up taking trades without waiting for confirmations. You're impatient. You're emotional. You get yourself into bad situations. It's not Wall Street. It's not the whales. It's not anybody else out here. You get you into bad situations. And guess what, guys? In life, it's pretty much the same thing. Oh, but my buddy said blah, blah, blah. So what? It's not on your buddy. It's on you. You're the one that decided to do whatever you did. You guys, I bring this up because there is such a lacking of personal responsibility these days. And I mean, there's always been people who, choose not to take responsibility, but it seems like it's become much more the norm these days. And I think a lot of it has to do with the global interconnectivity, with social media, with government trying to appease more and more people and do all these things. But guess what, guys? None of that's going to help you in life, and none of that's going to help you in trading. You can't be a victim. You absolutely have to take responsibility for every move you make, and then forgive yourself and learn from it so that you don't make the same mistakes again. But all of this is what you have to do. None of this can be done by me. None of this can be done by anybody else. All I can do is tell you, listen, this is the way things generally tend to work. These are the things you need to be concerned about. I'm the guy who's going to tell you, listen, what, you're human. You're going to make a lot of mistakes. And so risk management is the most important thing you'll ever do as a trader. You need to take it seriously. You need to get out there and make sure that you're always working on the risk management. It's the same thing I do 25 years now, guys. Okay, minus the first 4 or 5 years when you guys know that story. All screwing around and everything. Not being serious like many of y'all have been at the beginning, right? Thinking I knew what I was doing. Thinking I understood how things were, right? But after that, after I got out of my thick head there, after I got to the point where I said, you know what? I need some help. I don't know what I'm doing. I need to learn what's going on here. Since then, risk management has been the one thing that I've constantly worked on more than anything else. And so it would behoove you, I believe, to do the same. Okay? Let me see here. Geez, how much does the guy have to pay for you to force him to understand? If only it were that easy. Hey, man, you know what? If it worked, if I could virtually grab y'all and just shake you and it made you understand, I would. I really would. But, that's not reality, right? Unfortunately. I went through your first few months of crypto to a T there, Kevin. Yeah, man. And the great thing about this, guys, I talk about it and I kind of laugh a little bit, to kind of help you guys relax a bit, because it can be, it often puts people at a defensive when you say these things. And honestly, it turns a lot of people off to what I do. That's why we don't have thousands and thousands and thousands of members. Like all these fly-by-nights and these signals groups and all this other nonsense. Because the people who are with us generally want to learn. And they're open to understanding that they don't know what they're doing. And, they don't usually take it personally when I say this is the way that things are here. And so, it's just one of those things as human beings, we have to kind of move beyond that, right? We have to, so we can be better for ourselves. If we're not humble enough to recognize that, hey, we may not really understand everything fully and we need some help somewhere, man, you're just going to lose money, So many people out there actually have the money for coaching services and whatnot, and they refuse to do it. I don't pay somebody to tell me how to do this. I can learn everything I need to off the internet. Well, more or less you can. But just pulling off the internet means you have to sift through all the garbage, and there's a heck of a lot of garbage up there. And if you're brand new, you have no clue what's garbage and what's not. Case in point, everybody keeps saying, money printer go burr means hyperinflation. A complete lack of understanding of how money is moving from the Fed and where it's at and why it doesn't get to that point. Why the debt ceiling is such an issue right now in terms of dollar liquidity. All these things that are going on, people don't understand these things. And they have no desire to really understand them. Because money printer goes burr is funny and it makes them popular with everybody else who thinks the same thing. Guys, listen, if you are the smartest person in the room, find another room. If you're hanging around a bunch of people who all say the exact same thing and nobody's challenging what's being said, get to a different group of people. It doesn't mean you're wrong, but it means as long as you consistently expect that everything's going to be exactly as you see it, you can't grow from that. I have my opinions and ideas about how things are working here in relation to banks and banking laws and the way the global financial interconnectedness, the macroeconomics and everything are working. But as I continually tell you guys, I could be wrong. Now, nothing's happened yet that says I'm wrong, but I'm always looking for that thing, that thing that says, you know what, Chris? No, that's not correct now. Because I would rather make money than be right. Listen to what I just said there, guys. I would rather make money than be right. I hope that's y'all too. Because what that means is, you don't have this desire to hold on to whatever you're saying as new information comes in and completely says it's wrong, right? As a trader, that'll kill you faster than anything else, all right? It'll bleed your capital account down to nothing. Draw down all the way down. You have to be flexible, guys, as traders. You have to be willing to change your ideas when information, new information in the charts or otherwise comes out that says you may not be correct. But again, that's why risk management is so important, because you can have that in there in case you aren't correct. For instance, I posted a trade here earlier this week, USD yen trade, long, right? And I thought it was going up higher. I thought it was a different count. It was going up higher. But I set my stop loss to lock in profit there just in case I was wrong. Because if it went beyond that level, it would say I was wrong, right? Guess what happened? It hit that level. I walked out with almost $600 in profit. Didn't have to do anything. Just set the buy and let it go. And since then, it's really come down. It's changed the count. What I thought the count was. But because I had that risk management in there, not only did I not lose money, but I actually made a good bit of money. But then you get people like the person who commented on my post and said, $500, go flip an NFT. You see what I mean? This is the mindset of traders in when you're getting in a bubble, when you get into the top of a market, when you've got rational exuberance going on. I keep using that term from old Greenspan. But it does. Because in his mind, $500, oh man, that's nothing. You can make so much more flipping NFTs. And in his mind, that's going to continue to go on and on and on. He doesn't, with that attitude, he doesn't see it as a bubble. Me personally, you guys know I'm pretty risk adverse, right? So being risk adverse means that whole bubble frothiness of that market does not interest me at all. And it doesn't have to. Well, you could have made blah, blah, blah. I don't care what I could have made. I made blah, blah, blah. Right? I don't have to. I don't have the desire. I don't have this growing FOMO that I have to make $1 million in a week. I make what I make, which is great, and allows me to live the lifestyle I live without having to take on that risk. If you want to take on that risk, that's up to you. That's fine. That's great. But the lack of understanding and of deriding someone for actually making a pretty damn good profit day in and day out, is just on one trade. That's only one trade of the trades that I do. So, it doesn't make sense. But you don't get that if you're the new guy into all the frothiness, into all the exuberance. You can't understand that, unfortunately. Let's see here. Nice Man says, I've quickly looked at your Bitcoin count. Any of your wave ones are not possible to count as impulse waves as they are against EW rules. Just saying. We're in wave Z of a complex correction, not in the impulse to the upside. Hey, I appreciate your comments. You're wrong. There is no violation of the rules in what I've got here. It is what it is. I'm sorry that you feel that way. But we're good to go. One of these days, I'll take that level 2 exam for the CEWA. I passed that level 1 exam a while ago and just haven't had the time to get doing the level 2. Yeah. See, when you come in with comments like that, you don't say where it's incorrect. You just say, oh, it's incorrect. Well, I'm going to tell you it's not incorrect. If you had said where it's incorrect, I could show you why it's not incorrect. But, do what you need to do. Do you, okay? Could it be a complex correction? Maybe. Sure. Could. According to what we've got here, we need a breakout above wave B up here at 48, 825, and 62 cents to add confidence to the count itself here. But, we're pretty close up to that right now. So, yeah. But I would love for you to come back when it continues up higher and just, kindly apologize. That'd be great. So, you don't have to apologize. Just admit you were wrong. I mean, if I'm wrong on this, I'm wrong on this, of course. There are invalidation levels. But right now, there's nothing incorrect about the way in which the count works. The count is labeled here. So, yeah. I don't know what else to say about that. I try not to be rude or disrespectful or anything, but, we get this kind of comment every once in a while, and it really says nothing. Unfortunately, the comment doesn't. Because, again, you don't say, okay, over here it's incorrect because. And then I can say, okay, well, here's where you're wrong. Or maybe you're right. And I say, oh, okay, yeah, I missed that. But, we don't have that going on, right? So, yeah. Let's see here. 44.9 as an area. Yeah, possibly. They get you up here around that wave B termination point. Sure. Definitely possible. Again, it depends on the particular exchange you're looking at as far as what's going on here. Some of them have a further drop over here, which gives you a little bit different count. Others, like, again, this is Coinbase here, has this, it only dipped just below this level, but remains above this one here, giving you this ability to continue. But, they all generally kind of get you the same idea. This right here, here's the important thing. This thing right here, this high volume, large candle spread, that's indicative of a wave 3. And so, again, for me, it's wave parentheses 3 of wave circle 3. As we often talk about in Elliott wave, your breakouts of these, like these descending channels and whatnot, are usually thirds of thirds. They're third waves of third waves. It's where you get the most volume, the most price action, the largest candle spreads and whatever coming through. Because it's at that point that people recognize that it's not going to pull back further, that it's heading up, and they jump in. Wave 3 is easiest to trade, in all the charts and whatnot. Let me see here. Yeah, am I excited about Janet Yellen's unrealized gains tax? Man, oh man, that woman just needs to get on with herself. No, it just, seeking to make life a bit more difficult, right? What a pain in the rear end. By the way, you notice this swing high right here is 1 penny off of this high up here. This is 48,000. This is 47,999 and 99 cents. Oh, man. Let me see here. If that were to hold, what do we got here? Yeah, say you can do this as a 1, 2, 3, 4, 5 ABC, and then come on back down here toward this 38.2 or even the 50%. If it's a wave 4, as I've got it labeled here. I'm just going to do it here. Most often it goes to 38.2, sometimes to 50. Either way, basically what you're looking for is a pullback dropping below this swing low here. It's 46,754 and 49 cents. Looking for a pullback below that targets this area down here as a, basically as a retest of the descending channel resistance area. And that's taking Elliott wave and everything off. That's just normally what we would expect on that. So yeah. Amazon time, get everything instantly. What's going on, Boris? Yeah, exactly, right? What did Brian ask here? He says, make America... Okay, I'm not going to say your screen name there. But you want to hear my Chris's views about it as well? Let me see if I can figure out what we're talking about here. Sorry, I'm just trying to scroll up through here. Where is it? Oh, man, Bruce Springsteen. Man, that was great times in the early 80s. Springsteen, John Cougar Mellencamp, great Americana music back then. That was the stink all back then. What do I think about SPX printing a wave 4? We're going up for wave 5. It's possible, but it's got some work to do to confirm that. Yeah. Brian, I don't see that. Make America. I don't see that comment that Brian was mentioned that you wanted. So if you can repeat it. Okay. Just the one right there about the Janet Yellen. Oh, okay. Yeah. I'm not a big fan of unrealized, gains for tax purposes and whatnot. I think it. I mean, I can see what she's trying to do there, but it doesn't. From a realistic standpoint, I guess, it doesn't make a whole lot of sense, at least in levels of what should be fair and whatnot. Taxes should be based on what you actually make. And as you guys know, as traders, right? You can be really up one day and make a stupid mistake and just lose it all on some big, large flash crash, right? But, that adds a whole bunch of complication in this whole idea of this unrealized gains taxation thing, especially, depending on where that might happen within it. I think you just I don't know, man. I get frustrated a lot with government. I do. I really do. I understand why they're there. I understand why they're doing what they're doing. I don't agree with it a lot of times. But you know what, guys? A lot of that has to do with y'all. It has to do with people wanting more from the government. The more you want for the government, the more you have to give up in return. The more you have to trust them. But let's face it, government's just a bunch of men and women like you and me. They're going to make mistakes. I don't believe that people... in the grand scheme of things, I don't believe that people are necessarily good or evil. Now, I think that those who do really bad things, it usually comes from a place of trauma and or chemical imbalances in the brain. So that's it. But if you're of a normal sound mind, I don't believe that you're good or bad normally. But what I do believe is you tend to be lazy. You, me, everybody else. We don't try to do things necessary to hurt people in general. We try to do things to either avoid pain ourselves or to create comfort for ourselves. But these are the same people with these same things going on that are in, parts of government. And so, it's that trade-off, and, you kind of get what you ask for, right? If you want government to do for you, well, they're going to do for you. They are going to definitely do for you, because it means that they can say, listen, if you want us to do that, then you have to give up this, this, and this. And you can't question us. And if you question us, who cares? We don't really care. We're not really going to pay attention. So, I understand why they do what they do. I understand why Yellen wants to do this. I don't agree with it. I don't think it's the correct way to go about it. But even those in these large position guys, listen, macroeconomics, global finance interconnectivity, all these things they have a ton of moving parts. And most of the people that are in the positions that put all these moving parts together don't really have a full understanding of what it means. I don't have I know a lot. I understand a lot. I make a lot of connections. I don't have a full guaranteed understanding of how everything affects everything else. Nobody does out there. So we tend to end up creating more issues than not. And that's never cool, right? So, we just have to understand that people in government are just people, guys. They're doing a job. Some of them are more prone to use the power that they're given than others, but they're all going to use it. That's why they're in those positions. Those who would be best in government are those who don't want to be there. Think about that. Those that want to be there, they want to be there because they intend on using that power. Whether what they're doing, whether they're just doing it for their own good graces or, they really believe that it's the way that it needs to be done, they're going to use that power. That's the whole reason they want it. The problem is, even if you've got good intentions, that doesn't absolve you from the pain and hurt that you cause other people in doing that. But everybody's got a fallback. Oh, they're white. Oh, they're white males in their 30s or 40s. They've been in control all this time. Who cares if they're hurt now? Whatever, stupid stuff like that, It's a total disregard for humans at the most basic human level. The most basic level. Everybody gets into this whole religion and sexuality and race and all these things. And then it gets into government. And then they forget to do the things that they should be doing if they're going to be in those positions of power, and instead try to satisfy all these other things. And I talk about this because guess what, guys? That leads all the way down to the markets. Remember what the government does, what it does in terms of regulations, licenses, taxes, laws, whatever, all has a direct impact on what we're seeing here. You guys understand that? So it makes it really important to pay attention. Makes it really important to understand and to hopefully not contribute to the nonsense. But then people get, they go, well, you know what? My one vote of not contributing to that nonsense isn't going to make it not happen. So I'm going to vote anyway to get my good, right? Everybody else is going to try and get their good. I'm going to get my good. Guys, you know what I do? I opt out. Honestly, I do. When in my younger days, I used to be very vocal about this sort of thing. I learned it doesn't change anything. People don't want to listen. So I just go on. I do my thing. Whatever happens, happens. I work within it. If it gets to the point I don't like it enough, I'm going to move. It's simple as that. I don't know if it'll get to that point, but, doesn't do good trying to convince somebody when it's all about emotions, which is what it's all about, guys, okay? Hopefully you guys don't forget that. Let me see here. Nice, man. Just go ahead and tell me where you think the count's incorrect, man. That's all you have to do. All you have to say is, wave whatever to wave whatever is incorrect because blah, blah, blah. Look, red wave 1 is incorrect because of blah, blah, blah. Red wave parentheses 1 is incorrect because of blah, blah, blah. Black wave 5 is incorrect because of blah, blah, blah. But you said my 1 too, so I assume you're talking about this area here. So, it's not that difficult, right? Not that difficult. But anyway. Hey there, Sylvia, Esteban. Good to see you guys, all right? Let me see here. Let's see here. Just kind of catch up with you guys here. Okay. Anyway, obviously you're not going to get anywhere with that, so I'm going to go ahead and move on here. DXY, kind of looking at the idea that maybe we've got a 3 here and a 4 coming down. I believe it was last night we were looking at the possibility of a triangle forming here. A, B, C, D, E, or I'm sorry, A, B, C, D, E, with the idea that if it broke down below this swing low right here at 94.194, that would make it invalidated, and we'd be looking for this move down, which we've gotten. So right now we've pulled back about 23.6%. We've got Stochh RSI kind of trying to push out of oversold. We've got the 1 hour RSI still has room to fall further, so it could continue to go lower here. And that's what we're going to watch for. Right now, it's hitting this ascending channel resistance right now. But if I'm looking at this, it looks like it's a 1, 2, 3, 4. So we might have a little bit lower down. Now, if it's just a dip lower, or if it's actually a move lower toward the R2 pivot or the 38.2 is left to be seen. But that's what we'll be looking for breaking down through here. It still looks like it's corrective overall. So this right now from where we're at gives us a minimum wave 5 up there at 94.746, which takes it above my confirmation level at 94.734. So, that would be a big bullish move there. Continuing from there, we could see it overextend up to the minimum wave 3 parentheses target up here at 95.1 as well. So we'll have to watch that. As it keeps on going there. But, we got the weekend coming in. I don't think, Forex markets, everything will be closed in just a few hours. If you guys don't know, usually Forex traders pack up early on Fridays, head home for the weekends. So I don't know that we'll necessarily see any kind of, movement coming out of it all. substantial movement. So we'll wait to see how market opens next week. Let me see here. Kerouac, what's up, man? I'm always looking forward to the weekend. Though, lately it's been a lot of work trying to get everything ready for you guys and everybody else with all this stuff we're launching. Coming up here. The stuff we've already done, the stuff that's upcoming. So, yeah, a lot of craziness, right? What do I think about the volume right here? Enough buying pressure to keep the little run going? Are you talking about on, I guess you're talking about on Bitcoin here, right? So, yeah, the other way we can look at this... let me see here. Let me do this. Let me look at it this way. So this is Kraken. With Kraken here, again, it comes very close to it here. You got this low here at 40,750. You got this low here at 40,772 right there. So, again, it leads to the idea that in this case, we might have an ABC here as it comes down. But of course, it could be a 1-2 here and then a 1, 2, 3, 4, 5 is leading diagonal. So 1, 2, 1, 2 heading up. But what I want to look at here is this. Let me see here. This going on here. Something I've been talking about, which is this range, right? And so if we get into this range here, we've got this reaccumulation type thing going on right here. There we go. And so, again, we have this as it breaks down. So we have this here. It comes up here, breaks down. You could probably actually do something like this if you wanted to. And so what you then get here is you get your selling climax down here, leading into this secondary test, pulls back. Oh, I'm sorry, this automatic rally. Pulls back to secondary test, thrust up. And then we get this move down here. This move does not drop below the swing low here, so this just becomes an LPS. Just becomes your last point of support. Move back up. You've got another last point of support. So you get last point of support, show of strength, last point of support, show of strength, pulls back here, and then you get this large breakout up here. So, basically you have your phase A, which is your stopping phase, phase B, which is your building of a cause, phase C, which is your final test of your lows, phase E, which is your interior markup, a D, which is your interior markup, and then phase E, which is your exterior markup here. So, if you're looking at this, things continue to break out higher here. If you wanted to, this is just local here. You could actually get out over here and go, okay, well, I've got my, my area here where we've had this breakdown. And then it comes into this swing low down. So you have this high volume right here and this large lower wick. So this entire change of character that pulls it back up here. So this marks your, preliminary supply coming in, and then your selling climax down there at the bottom. And then you get something like this. So you get your selling climax down here. You get your, I guess I'll probably put it right about right there. Kind of right around this area right here. You get this automatic rally, and then you get this bit of an upthrust here. It comes back, secondary test, pushes up, gets it back down here. Last point of support again. So, show of strength, last point of support, show of strength. Breaks on out through this resistance right here. And so it breaks through on this high volume in this large candle spread. So it denotes a likely jump across the creek here. So again, the idea that we pull back here would be in line with what we normally expect in Wyckoff, which is this back up to the edge of the creek now. So you get this pull back down toward this resistance, which becomes support. And then we head up. So that just becomes this this wave 4 target. Whoops. Hit the wrong thing there. It just becomes this kind of wave 4 target here. This part right here. And you notice how you get this little sideways here right at this area right here. Again, if we continue to look sideways here. Oh, doggone, hit the wrong button there. Right where that area kind of is in there. And actually, you know what? I'll just go ahead and grab this right here. Maybe a little bit easier to notice. But if we take this sideways here, you can kind of see how this works as Support and resistance along the way here. So breaking out above this is a pretty good clue that we're going to continue heading higher overall, because this is a pretty major area of support and resistance right here. So again, if it pulls on back to there, it makes a lot of sense. Wave 3, wave 4 on that pullback, wave 5 up, to continue going on. As far as Wyckoff goes, again, a nice structure here. Your volume works out well. See how the volume dies off all the way through it until you're getting to this point here, in which case it starts rallying until you break out above that resistance, that supply. Large large volume, large candle spread popping up through the supply. And that's what you want to see. That's what you want to see. Let me see here. Y'all talking about the Dutch? Andrew, thank you, sir. I appreciate you, man. Oh, man. Just got to catch up with y'all. See, it looks like y'all are talking to Hank about being Dutch, so there's that. But anyway, yeah, I mean, so, from this, it looks good right now. And, if you look at other things, it found resistance right here where you would expect it to, this high volume node. So this is the level at which, prices, look at how it pushed up through here. And we're up here. These are the levels where price is finding the most interest in this time frame. So back here for almost 2 months now, price has found the most interest right here, and we're kind of using that as support at the moment. So if you need a reason why it could continue up higher, well, we're at the top end of this this node. So, but you're still going to look for a pullback into it. It's not like you're going to go from here, I don't believe, up to 55,000 or something. Can't say it can't happen, but that would be kind of odd. But it could. Who knows? But I think we're going to get that pullback. And like I said, if not, we can look for that higher target up here at the R2 pivot on the 1 hour. But prior to that, if you want to keep an eye out prior to that, look right here at this this previous swing high area here. This kind of supply. Whoops. Right here. If it's going to stop before that, it's going to hit this area and do it. So what is that? 48,500 to 48,800 kind of area. There we go. Yeah, see, that just kind of gets you right there. That's actually that target. That is that target that I was looking at, actually. 49,967. So it's just below that is where that is. Now, again, this is the Kraken chart. So, when you look at this here as the Coinbase chart, it's actually the same general area. It's where you have that same general kind of thing going on. But, it just depends on which... right there. Yeah. 48,760. So it is that same area. It's this area right here. What I was trying to say is it could be a little bit different because, again, different charts, price moves just a little bit differently. But it's this same area right here, the same supply structure right here. Up near the wave B resistance. So, yeah, if it was to continue going out there, that would be the first place I'd look. And then if it continues through that, then I'd look up, up here toward that 49,970, 49, or I'm sorry, 50,000 kind of area, that $100 range right there. But, again, even with everything, we've still got a pattern target here as well for that wedge that takes us up to around 51,000, 51 and a half. Or, I'm sorry, 51,060 or whatever. So, yeah, some possibility in that. Let's see here. One of the indicators you find adds no value is VPVR. Just look at the chart. Yeah, but the problem is a lot of new traders don't understand how to look left. They don't understand about price levels, horizontally. Just gives them an easy way to visualize it instead of having to try and figure it out looking over here. So for a lot of new traders, it's a big help because, again, it gives them that visual representation of where they should generally be looking to the left. So, yeah. Any thoughts on this headline published an hour ago? New York Times, Pelosi delays vote on $1 trillion infrastructure bill. So here's what's going to happen. Again, guys, you have to understand this whole government thing is just a bunch of nonsense. Everybody's posturing. Nobody wants the government to default. In other words, which is what would happen if you're getting beyond that mid-October maybe point. Without the debt ceiling being raised. No, I don't think nobody really wants that. But those that maybe want it so that they can look like, oh, the Democrats are looking good, or oh, the Republicans are looking good. They have their reasons. Republicans says, we were not going to be goaded into this. It was, it's Biden forcing all this up and sending all these payments out, and we got to take a stand somewhere, blah, blah, blah. Democrats will be like, look, the Republicans don't care about the government or the people. They just want us to give them concessions and whatever. It's the same thing both sides do all the time, guys. It's all a big measuring competition, if you know what I mean. But that's what government ends up being, guys. I don't think we're going to go into default, but here's the thing. We don't have to actually get there. It's just the longer we go, the closer we get to that point, can still have major repercussions throughout the markets. And the economy and everything, as we get closer to that. Remember, it was 2011 when the U.S. debt was downgraded. When we got close to a default there, or did we default? I can't remember. But if not, we got pretty close to it. The market, the stock market dropped like 20% that as a result of that. One would suggest that we're much further along in the overextension of this credit bubble. So if something like were to happen, we'd get a much larger than 20% result from that. But again, we don't have to actually default to feel the negativity of that. Okay? The more we continue on and on, getting closer and closer to that point, the more the market starts feeling it. And remember, we need to have those treasuries out there because of QE. I mean, that's the funny thing that works. QE, the money isn't actually coming to you or me and out of our market. It's over on that other side of the market where it has nowhere to go. So that's why it all goes into the reverse repo facilities, guys, overnight. It has no place else to go. Banks are not lending out money like they year over year. That we showed you. We looked at the St. Louis Fed's charts there. Year over year, we're way down. With everything, with money production, with printing money, we're still printing money, but at a much, much, much less significant rate than what we were. Banks are not loaning out. They're not doing what they need to do. That's the only way that you can rectify all that money sitting in that area there, because it's not making its way out to us, guys. The only way it does is through banks making loans. But banks aren't making the loans they need, that they need to at the level they need to deal with that liquidity that's sitting over. So the money just stays locked up over there. And and then with the debt ceiling here, there's no new treasuries to come out for that money to go into, right? So we really need that debt ceiling to come in there. If you don't want the economy to curl up and die, there's a long range of things. Like I said, guys, join the newsletter there. I went through a much more greater detail of this and gave you all some links to some good information about it. I think just this past week. So sign up for it. You can read all those last 3 weeks of newsletters. Get a better understanding of what's going on here and what it might mean. Yellen's not incorrect about the problems it could likely cause if it does. But she's also on the thing about, hey, let's abolish the debt ceiling forever. In other words, let's just give government free rein to produce as much debt as it wants. I guess it depends on how you feel about the whole thing. What's up, W? Good to see you checking in there. Comment man says, I'm reading the article now. My thinking is that they will pass something and the market will like it, but until then, people are nervous, so it swings. Yeah, and here's the thing. Biden just signed into effect he basically just kicked the can down the street here until December 3rd for government funding. So the government averted a shutdown. everybody's going to continue to get paid. Federal workers, all that kind of stuff. Just that stopgap measure that goes through until December 3rd. But they're going to have to make a decision on that. Now, worst thing possible that could happen, guys, is the debt ceiling continues to remain in place and they don't come to an agreement on the government spending. If both those things were to happen, I don't see how the market doesn't correct over 50% at least. I see that as a huge catalyst into what could become a really bad depression, because we're already so overextended in terms of credit as it is now. So we'll see what happens with it. I'm watching it keenly. I want to see what happens. Non-farm payrolls come out next Friday, guys. I might have mentioned it before they came out this Friday. Completely slipped my mind that this Friday is October 1st and what that means. So if you don't know, the NFP, the non-farm payrolls, comes out the first Friday of every month, unless the first Friday is the first of the month. In that case, it comes out on the second Friday of the month. So it'll be next Friday that the non-farm payrolls come out. Remember, as far as Powell goes, as far as employment numbers goes, he says that he's not too worried about it. Their inflation, remember, they looked in the two prongs they were trying to get to. They were trying to get to inflation to a certain level, and they were trying to get unemployment to a certain level, right? And so Powell, as far as he's concerned, the inflation thing is good to go. They just need to get some confirmation on the unemployment. And so for him, he says he doesn't need a big blowout number or anything on this non-farm payrolls report. He just wants some decent numbers. And he says if he sees that, he says he's going to feel like that second part, that unemployment part, is clicked in as well. Now, what does that mean for everything? Well, that means, guess what? Taper. If these two things are in, that means taper probably November, as early as November. Now, that doesn't necessarily mean interest rate rising immediately or anything like that. But the market will take it, if taper starts happening, the market's going to take that as bullish on interest rates rising. And guess what? Your dollar's going to get bid the heck up. Everybody in anticipation of that higher interest rate. Why? Because the higher interest rate your country's currency has compared to another country, the more valuable that currency is. So if you all were around during and paying attention to the FX markets mid to late 2000s, 2004 or 5 until 2010, around that area, 11 maybe even, you'll know that the Aussie was where it was, man. The Australians there, they had great interest rates, really, really high up there. Great in terms of the strength of their currency. And so you wanted to be long Aussie dollar. So it was a great carry trade for quite a while there. But, so here we are now with what's going on. And so, everybody else is lowering interest rates and everything. And so the idea being that if the Fed raises interest rates, of course, it's going to make the value of the dollar rise. And so the value of the dollar rising makes it more expensive. More debt, more U.S. debt is held than anything else, which means people have to repay that U.S. debt with U.S. dollars, which they don't keep on hand generally, which means that they're going to be in a rush to get more of it, because as that dollar continues to rise and gain in value, when they have to get those dollars, it's going to be more expensive. So that means their debt is more expensive to pay off. So it just becomes this effect where you continue in and in and in, and drives the dollar up. Again, as I've been talking about, I think we hit deflation, and then I think we hit stagflation for a while. And so that'll be not so great for people generally in the economy. Now, guys, if you're traders, I'm going to tell you what, all this happening, all it means is price is going to move. And if price is going to move, that's all you want as a trader. You don't care whether price is going up or down, as long as it's making movement that you can catch and be in on that trend. I see a lot of people who are new to trading who get really nervous when I talk about these things, because they're like, oh my gosh, that's bad that the economy is going to do all that. Yes, it's terrible. It's a product of the way that you run a debt, when you have a debt-based economy, it's what happens, right? But if you're a trader, that doesn't mean, not a traitor, a trader, that doesn't mean that that's the end of anything. As a matter of fact, it could be one of the greatest opportunities in your life to make a ridiculous amount of money. So don't forget that. Okay? Do I think it's a good idea to invest in Bitcoin right now? It depends on who you are. It depends on your time frames. It depends on what you really believe in it. The one thing you have to remember is Bitcoin is very speculative still. Everybody's going to give you reasons why, fundamental reasons why Bitcoin needs to go up. At the end of the day, guys, it's speculation. We buy it because we believe somebody else is going to be able to buy it at a later date for a greater price. Okay? I would say you would have more strength in buying it if you buy it once it breaks out of the all-time high. Because until it breaks out of the all-time high, nothing's guaranteed. I think it's going to go up higher. I've been talking about this since 28.8. You know, and here we are at 47.5. So I think it's going to go up higher. But, you know, again, we don't trade on our opinions, right? We trade on what the charts are telling us. And right now they're looking like it's going to continue up. But it still needs to get above that level. Let's kind of get out here. It still needs to get above, you know, again, depending on how you want to count this, whether you want to count this as a 5, a ending diagonal, or a 3 as a flat here, or a 4 as a flat. You know, you need to at least get above this level, which is 58,367 here on Coinbase. But really, you want to get above this level at 64,899 to really just say, okay, we're above that all-time high. And we're likely heading up there. Again, getting in here, not knowing what you're doing, just hoping it goes up is not the way to trade. Okay? Because, you know, it still needs to get above this level up here. Now, from a daily perspective here, look at us. We're breaking out through the daily pivot from underneath. High volume, high candle spread. If you're just trading pivots, this is a bullish indication here. On top of that, we've got this descending channel resistance here that we broke out of. So forget Elliott Wave, forget everything else. If I'm just trading pivots and this bull flag right here, for me, I should be long here. For me, this tells me it's likely going to go above this swing high here. But again, nothing's ever guaranteed. But, you know, as a trader, you're looking for those things that add up as support for whatever way price may be heading or not. Yeah. So, yeah, you know, I mean, everything else aside, you know, again, we had somebody in here earlier talking about the Elliott wave count, saying it wasn't correct for whatever reason. Never actually explained why they felt it was incorrect. But, you know, if you take all that out of it, if you don't like the Wyckoff, you know, analysis, which we've done both at this area, which gave us the whole reason we went long down here, or up here, you know, you can take all that out of there, guys, and looking at pivots, moving in sideways between the S1 and the pivot. We're breaking out above the pivot, and we're doing it on large candle spread and large volume. As somebody who only traded pivots for a few years, that's all I traded for a few years, this is a bullish setup. This is 8 or 9 times out of 10 going to continue higher. So, you know, from that point, we can look at it. But again, there are no guarantees, guys. There is absolutely no guarantees in any bit of trading, guys, or investing or anything like that. That's why risk management, I keep telling you guys, risk management is so important. But nonetheless, we've got, and so again, we look at the other thing here, which is the breakout of this area here. So let me do this real quick. Let's see here. I'm just going to kind of put all this into a group here. Look at that. That's the only one I missed, looks like. Get up in there. All right. So, yeah. That was pretty good for a grab, wasn't it? So, I mean, you know, if you look at basic structure and patterns and whatnot on here, you've got this range, which we broke out of. We came back. We retested as support. And now we're rallying off that range, high volume, high candle spread, up through the pivot, the daily pivot, up through the descending, you know, this bull flag resistance here. I mean, it's just a confluence of events that says, you know what? This is most likely heading higher. But you notice, I didn't say it's guaranteed to head higher. I would love to say it's guaranteed, guys. But I've been doing this long enough, quarter of a century now. I know that there are no guarantees in trading. No matter how sweet something looks, how perfect it looks, you could be missing something. And I've been doing this a very long time, and I'm very good at it. I make a lot of money with it. But I always still do so with the idea that, guess what? It may not. It may not be what I think it is. And so that's why I continue to preach constantly about risk management, guys. Bitcoin Anarchist, what's up, man? Checking in from Australia. Held captive by a jailer. Our country is for sale. Yeah, the system is a fair. Man, I've seen some of that stuff you guys have been going through over the last year, man. My heart goes out to you guys. And government's really cracked down on y'all over there with the COVID thing. Just stay safe out there, man, okay? Let's see here. Oh, Tellurrider's out. Oh, well. I'll see you later, buddy. Let's see here. Let's see here. I'm underrated, W? Yeah, well, I don't know. You know me. I mean, you've been following me a long time. You know. I do what I do. I'm not out. You know, I probably do a disservice by not marketing much harder than what I do. But I'm just a firm believer that I'm going to get in there. I'm going to put my head down. I'm going to do what you guys pay me to do. And, you know, I just believe that people go out there and talk about it and spread the word. And, you know, maybe it's a little naive to think that. You know, so we're going to up the marketing a little bit here coming in. But, you know, again, that's generally what I do. You know, I get in there, I do work all day and get done and just try to provide the value that I hope I'm really giving you guys there in Discord. Ari, what's up, buddy? Man, I appreciate you too. Yeah, guys, like Bianca says, hit the like button. I would appreciate that. My pivots are monthly or weekly. So these pivots here, the easiest way to do pivots, guys, is to go up here on this little FX here, type in pivots, and they've updated these things now. You see it's updated up standard, high, low. So nowadays you just hit the standard thing. And so you hit the standard thing here. As you can see, these are all the previous ones over here. And then that's all you do. Don't touch any of the settings in it. I mean, now you can go in there. Let me see here. You go in here and hit this. You know, you can change your colors or whatever. Leave it on traditional. Leave it on auto. I always turn back the number of pivots back. There used to be a turn it off feature there. Let's see if this works. Yeah, there we go. You can just put it to 1. It'll just show the recent one. Or you can put it to 2. It'll show the one prior to it here. If you want to get a little bit more idea of where these resistance supports are coming from there. But yeah, I mean, that's all I do. And then it changes, so whatever time frame I'm on, the pivots work for that time frame. So that way you don't have to set them at daily, weekly, hourly, or anything like that. It does it automatically as you change. See, this again, that's a pivot on your daily time frame there. If we change it to the 4-hour, a little bit different there. If we change it to the 15, oh wait, you know what? Actually, is this all staying the same now? Oh, no, it's not. Okay. I don't think it is. Looks like they're just a little bit different on there. But they should be. You know, should be based on that time frame that you're on. So, you know, your 15-minute pivots would change at the end of the day. Your 1 and 4 hour pivots, you know, those kind of area there would change at the end of the week. Your daily pivots change at the end of the month. Your weekly pivots change at the end of the year, kind of thing. So, yeah. Speaking of weekly pivots, look at this. Again, using pivots here. Look at this structure here, guys. Resistance, pullback, pushes up resistance, support, resistance, sends it on down through that support, finds support again where we already were, resistance again, breaks on out, resistance at the previous support right here, pulls back, hits this previous resistance right here as support. And that weekly candle right now is bullish engulfing. So, I mean, you know, again, guys, don't worry about Elliott wave counts if it's not your thing or whatever. There are so many ways to read the charts, and they all, if you do them properly, they all kind of lead you to the same place. And that's one of the biggest things I push, guys. I read the charts the way I read them, the way I've learned to it over, quarter of a century now. But just because it works for me, I understand it. I'm used to doing it that way. But just because it works for me doesn't mean it's going to work for you that exact way. The important thing is for you to get in there and understand, first of all, the importance of risk management, how to do it properly. Second of all, how and why markets move the way they do. And then third of all, then whatever indicator or whatever style of trading, Wyckoff method, Elliott wave, supply and demand, ICP, whatever you're using, and then you stick with it. It's not going to happen overnight. It's not going to happen in a week. It's going to take you months to just get to using it decently and, consistently. It'll take years before you master it. But even when you master it, you're still not really done. You still have to continue to practice and to hone what you're doing. It's like any other skill you guys have out there. All right? Let me see here. That's right. Organic growth for TWC. No hype. That's right, Kevin. Estabana, you're welcome, man. Yeah. Oh, yeah. I'm way over 35. I'll be, gosh, how old am I going to be? I guess I'll be 47 next month. Man, see, I don't usually say that out loud. That's awful. Oh, man, I don't feel 47, man. But anyway, just from looking at the structure here, I mean, even if you take off the pivots, just look at the structure as I talked about it here. Just looking at the structure where you've got these areas of support and resistance based on price action here. I mean, this is screaming that it should go up higher. A lot of people are going to argue because they're emotionally bearish. It is what it is. And if it were to break down, I've got levels that I always talk to Discord about that I'm looking at to kind of tell us, hey, maybe we're wrong about this continuing higher from here. But right now, it continues to not hit those levels. It continues to stop prior to them and head up further. So we'll look for that breakout here, which then, if you're just trading this blindly like this, guys, listen. If you get a breakout above this swing high right here, this 48,825 and 62 cents right here from the week of the 13th of September, then your immediate target should be the swing high right here at 52,944.96 cents. If you break out above that, then your target should be this area up here, this 60,000 to 64.9 basically. That should be your target then. If you break out above that, this is price discovery up here. Anything can happen. Usually what happens to Bitcoin in price discovery. Oh, I don't have it here on the Bitcoin chart. But anyway, it's this happens usually. Once you get through that swing high, through that previous all-time high, and pull back a bit, and things just get kind of crazy after that. Now, granted, this is a little bit different than here. I have been saying since, gosh, man, when we were back here in that 2018, 2019 kind of correction, everybody and their grandmother was talking about how, it's like 2014. And I said, no, first of all, I'm not a big thing about that kind of cycle right there at all, that whole idea that it's going to be like that. And everybody's like grabbing, they were going up here and they were copying the candles and putting in there, oh yeah, it's going to do this. I said, but if you believe it has to be like something, I said, it's a lot more like 2013. 2012, 2013 there. I guess 2012. 11, 12. God dog it, where is it? BLX, here we go. Everybody was saying it was a lot like this. And I was saying, well, if it's going to be like anything, it's a lot more like this right here. And guess what? I wasn't too wrong, right? I mean, we had a bigger pullback here than what we had here. But you've got this, which I believe would be this here. And this happened, look at this, finished back here in, right here at, what was this? 30th of September 2013 is when we had that low, and then it fired up. So this is right here getting to the end. Now this is the weekly on Brave New Coin, so it doesn't have It's not, up to date here on where the price action is at the moment. But today's October 1st, right? So just a day off. Well, actually, it was overnight into today, leading into that big roll. So, I mean, now I'm not saying that we have to see something like this. But man, oh man, wouldn't that be crazy, right? Wouldn't that be crazy to see that? So yeah. I'm just completely ignoring charts you've sent. Nice man, you have not sent anything, man. Nothing has come through. You can't send charts in chat, man. You need to relax, dude. Gosh. I really hate, I'm a really nice guy. You guys know this, right? But man, I get so bent out of shape when people come on and they act like this. They act like they have no common sense, no respect, no human decency. They get out there and just go off at the mouth, and they refuse to be decent people. And that irritates me so much. I told him time and time again, tell me what wave and what is wrong. He's refused to do that. Apparently, he says he's trying to send charts. But you can't send charts in chat. And then he says, oh, look, I'm just completely ignoring the charts that he sent. Laugh my rear off, right? Absolutely, guys. This is what I keep talking about, man. How you view the world, how you treat people in the world is exactly going to be reflected in your trading. And if you're this kind of person, it's not going to end well for you. That's what I've noticed through my life and the thousands and thousands and thousands of traders that I've talked to over that time. Which is why I talk about it all the time, guys. There is a big connection between how you are in life in general and how you are in the markets. And you can usually understand how people are in life because they project like this in the markets and how they act. It's very frustrating. Oh, you already sent him in timeout? Well, I appreciate whoever did that. I try so hard, guys. I try so hard to give you helpful stuff. And, we still get people like that. It is what it is. Anyway, the irony of that cat's name is classic because bears hate the horns. It's almost impossible to outline where exactly you're wrong throughout the chart. It's not nearly impossible. Man, you know what? Listen, I'm done. Whatever, man. If you can't say, listen, wave 2 is incorrect because it goes below wave 1 or something just like that, then what good are you doing here, man? You're just acting like a jerk. I mean, it's like you just want attention, and it's like any attention's good. Man, it's such the problem with kids today, man. And I don't know how old you are. I'm just talking about the generation now. Where everybody wants attention and they don't care that it's bad attention. They just want attention because of social media. Man, it's not cool, man. You haven't tried to help, man. You have not tried to help one bit. But anyway, whatever, man. I've tried. So oil here. Still kind of trying to see if we've got this finish on this rally here. Right now, it's possible we've only got an ABC down, and then this is a 1 and a 2 heading back up, and we're finishing higher toward, that 80 kind of or $90 move. Right now, we're just kind of doing this sideways thing. And so we kind of want to see how does this play out here. So if we rally above this swing high up here at 76.67, of course, that's going to invalidate it, right? With the way we've got this here as a flat, see, I've got this as a 1, 2, 3, 4, 5. If we're breaking, I think honestly, if we're breaking out above here at this 76.07, I think that that's going to lead to a breakout above up here, and so it's going to continue to rally higher there. Which again is going to give strength then to the Canadian loonie, and so we'll see how that plays out there. As far as this range goes, you can notice that there's a lot of buildup here, right in this Lowe's area, right here at this previous area of resistance, support area here, which you can notice is right here where you have this gap right here. This is that weekend gap where it breaks up and then you've got these nice strong candles heading up. And that's the same area where we found support here. We kind of dipped through, but really kind of found support in that same area. We've got wicks down here, but really price is just kind of, the volume and everything happens right in this area right here. And then that strong rally up. So we're going to wait and see if we get that breakout above here or not on it. If we can get a breakdown below the swing low here at 74.23, that's going to take us on down here to a minimum wave circle 3 target of 71.37 as it does it there. Andrew, man, have a great weekend. Yeah, price may rally this weekend, but, it just rallied real strong right now. So I could also definitely see, that Bitcoin pulling back to that 38.2 to retest supporters resistance to support over the weekend. I could see something like that happening, sure. Because everybody's going to continue buying into it right now. Even if it makes a little bit higher movement up that we talked about to that green range, to that green supply area. Even if it makes that up, I mean, that wave 4 should still pull back toward that the area where we're looking at, that kind of area down there. And with everybody continuing to buy into it, that supply continues to come in, it'll wear out all that demand, and then you'll see it just kind of drop eventually. So we'll see there, right? Let me see here. Let me kind of catch up with you. Kimozabi says, sounds like that individual was trying to use Elliott wave to predict the market instead of seeing Elliott wave as a way to set up a trade and invalidate it. Price will do what it wants. Wave counts don't dictate. Yeah, exactly. The idea of Elliott wave, guys, I keep telling you this. The best way to use it is to help you understand the trend and potential reversal areas. Because other than that, guys, all you have to do is be in that trend and then lock in profit and then rinse and repeat. New traders tend to make it make it more difficult than it has to be. They try to zoom into the small time frames, figure out exactly where price is and exactly where it's going to go. The reality of it is, guys, you're going to be please listen to what I'm saying here. You're going to be a much more successful trader if you generalize a lot more. You don't worry about getting the absolute lowest price, the absolute highest price. You're looking for areas to enter where there's an established trend on whatever time frame you're on, and then you're looking at smart areas of where liquidity is. So supply and demand structure kind of areas. And what you're trying to do is just ride that trend toward that next one. You don't have to ride it all the way to it. As I teach every Wednesday, I've taught so many over the last year plus now. Every Wednesday, we have for Tier 3, we have our tips, tricks, and techniques segment, live stream for an hour. And I usually teach these rules-based strategies on how to enter and exit trades. How to find an entry in a trade that's trending intelligently. Lots of different ways to do this. So all you have to do is get in and then ride it for a bit and lock in that profit and then rinse and repeat. That's all it takes to be a successful trader, guys. When you're trying to make it very difficult and you're trying to get way down into it and you're trying to do all these types of things, that's usually where you end up losing money. You usually end up losing money that way. So don't do that. Really. Because you're doing this to yourself. You're setting yourself up to have a difficult trading life. You end up spending all day, every day looking at the charts, thinking that the longer you look at them, the better it's going to be, right? And what it does instead is continually looking at charts like that develops stress in your brain, in your subconscious. You don't often recognize it's there. It leads to poor sleep. It leads to poor concentration on other things. You're never there in the moment with the people in your life like it matters. Gosh, guys, I'm a big family person. And I'm a strong believer in the idea of actually being in the moment. And it hasn't always been that way. I didn't grow up that way with my parents. We were a nuclear family, right? Dad was Navy, Mom was Navy, and then doing her, DOD stuff. And so a lot of times growing up, it was just me and my sister for many hours in the day when we weren't at school, sitting home by ourselves. We didn't get that. But even as an adult, it took me a while to get to that point to understand that that is the most important thing. And so even though I work these ridiculous hours that I do for TWC and all this other stuff that we're launching now, which is even more hours, I make it a point every day to have a few hours of which I'm with my son. Because I firmly believe, guys, that if you're doing this, it should create two things. It should create time. It should create freedom and money. Freedom as in the ability to schedule your time as you need. The ability not to be on someone else's schedule. And of course, the money to be able to then do the things that you want to live, whatever life it is that you deem that you want to live. I don't live overly extravagantly. Much of my money ends up going back in the markets. But I live a very, very nice life. A very nice life. I don't have to worry about bills at all. Anything like that. I pretty much go out and buy what I want when I want. And so I think that is important. If you get nothing else from me, guys, I hope that really hits home. Because at the end of the day, when you're on your deathbed, you're not going to be wishing that you would spend more time trading. You're going to be wishing you spend more time with family, friends, people that you care about, doing something else, something where you created memories for yourself and for them. Because when you're gone, you're gone. All anybody else has left of you is memories. I really hope that gets through to everybody. You don't have to agree with me, but I really believe that's the way it is. And that's how I live my life, and that's how I live my trading. So yeah. Spend more time in pools, lakes, rivers, oceans. Just don't get attacked by anything. But yeah, I would agree too, man. Love the water. Love the water. Let me see here. So this kind of, what we're looking for with oil here. Remember, if oil continues to rally here, it will give strength to the loonie, the Canadian dollar. But remember, the Canadian dollar, when you're trading it, it gets strength from the strength of oil, or it gets weakness from weakness in oil. But then that also has to go, in comparison to the strength or weakness of the dollar. So you can have oil popping up temporarily, but the DXY continuing to just pound higher, and you could still see the USD rising against the Canadian dollar. But your best trades, if you're trading the USD CAD, is looking for when oil is going down and the DXY is going up. Those are the easiest time, because at that point, the loonie is getting weakness from the oil, and it has to compete. The loonie has to compete against the strength, the gaining strength of the dollar. And it's just an easy trade. So always remember that too there. Let me see here. So yeah, there we go with that. Let me kind of check in here real quick. Let's look here at the NASDAQ. So again, as I always remind you guys, this is the NASDAQ composite, not the NASDAQ 100. Let's see here. We've got a lot of overlapping price action down here, which may suggest a bottoming. If I look here, it looks like we may have a 1, 2, 3, 4, 5. So it looks like it may have stopped short of my wave 3 target a little bit there. If so, that puts wave 4 into wave 1. So I'm really iffy about that sort of thing. What I think might be happening here is we might have a 1, 2, 3, 4, 5. So I think, again, this may be 1 here as a leading diagonal here. So 1, 2, 1, 2, and then 1, 2, 3, 4, 5 will give us this wave Roman numeral 3 down here. So in order for that to be what it is, then price just has to reverse and drop down below the swing low here prior to this swing high up here at 46.3236. Now we kind of look at this, and I've got these 5 waves up. Here's 4, here's 5 up here. Is it possible maybe this is 4? We've got a 5 coming up. Sure, it's possible. Let me see here. If I'm looking at my count here, if I'm looking at my count here, if my count's correct, we've dropped below this wave parentheses 4 here. So this is actually, if you look at it here, it's your intermediate wave 4. We've dropped below that, so that should then lock in wave 5 up here, if the count's correct. Now, again, the count may not be correct, right? So you're going to have to look for that further decline here. God, I hate that it always moves these things over. So we'll look for a move down here below 1239.70, 12,397. If we can get below that, that should say that that tops in. Until then, there is a possibility this count here could be something different. So I've got this as a 1, 2. God dog, it moved around. 3, 4, 5 up here. How else could we do that? Maybe it could be a 1, 2, 1, 2, 3, 4, 5. Yeah. So we could have this as a 1, 2, 3, 4 here, and potentially 5 coming up. Let's see here. If we do that, we've got a pullback right now to the 38.2, which would be a solid wave 4. 4 hours reset down and oversold here. Bullish divergence. How's that daily look? The daily is down here and oversold and curled back up. Hasn't crossed bullishly yet. Yeah, but we've got, we haven't dipped down and oversold yet. It doesn't have to, but while it remains above here, there is the possibility price could head down further. Even with that, I mean, to pull back to a 50% here at 14,032 would still be a solid wave 4. Again, I've got this as a 1, 2, 3, 4, 5 here, but just looking at the structure, 1, 2, 3, 4, 5. Maybe again we've got a 1, 2, 1, 2, 3, 4, 5, 3, working on 4 here, and 5 still to go. Definitely possible. Definitely possible. Bianca, have a great weekend. Enjoy the evening. So yeah. Kimosabi says potentially the 3 waves down on Bitcoin from 54K is just an A wave of a larger ABC. Well, I've got actually 5 waves coming down from, oh, you're saying from 54. Let me see here. Where's 54? Where are you looking at here? Oh, here. Oh, okay. Yeah, I think you're talking about this area, right, Kimo? So you're saying ABC could just be wave 1 or wave A. This is wave B, and then you have wave C down. Yeah, it's possible. It's possible. Here's the thing, though. If this was just to be an A and this was to be a B, and you had a C coming down, here's the other things I'm going to look at because I'm using Elliott wave, right? So I'm going to look at here and say, well, it basically made it to the 50% retracement. So that itself is, ups the possibility that the 3 waves down is an ABC and it's done. Okay, it doesn't guarantee it, but the fact that it has reached just about that 50% level is your first indication that could be potentially done. Because remember, if you're looking for this wave C, we generally look to reach wave A, right? And so this upward move may be done or just about so. And, I mean, it comes out all right here. If we're looking for C to equal A, it would do so down here at the 70.5. Possible. So, yeah, I mean, definitely is possible. Sure. If because this is definitely 3 waves down here. Again, if we break out above this swing high right here, though, this is that 48,825 and 62 cents. If we break out above that, in terms of Elliott wave, that adds confidence to the count, right? It adds confidence to the count because it says that ABC is done. Now, like Chemo's saying here, maybe this ABC is a W, right? And then maybe this is an X, which would have to be an ABC going up. And then you'd have to have an ABC down for Y. Maybe a little more in-depth in that count, though. I tend to try to look for the easier counts when I'm doing Elliott wave because most often it's those easier counts that are correct. I would say that if this is a W here, so an ABC down is a W, I think I would probably see this as an A, and then an A, B, C, D, E as a triangle here for X. Or I'm sorry, for B of X. And then I would be looking for this, maybe 1, 2, 3, 4, 5, getting it up here as the C of X. That's how I'd probably be looking at it. Instead of maybe like an A, B, and C, I think maybe I'd be looking at this as an A, and then A, B is a triangle, and C for X, and then an ABC down for Y. Sure. That's probably how I would look at that, though. You saying it just looks too pretty off the 30,000 lows as a 5-wave up and 3 waves back? Grab these lows here. Oh, wait. Let me kind of zoom out again. Or are you talking about this here? Or you said all 54. 54 is up here. But you're saying off the 30,000 lows here. This looks too pretty as 5 waves up and 3 waves back. Can it be too simple? Nah. Getting this as an ABC. Okay, so the extent of this rally, if this was just to be A and maybe this was to be B and then we had C still coming up, if that's what something you were looking at, the extent of this rally, how far it's pushed up toward, whether it's this swing high or this swing high, really makes it less likely. It doesn't make it impossible, but it does make it a lot more less likely that this is corrective here. I was going for a corrective maybe up through here. But once, as I was talking about when we were all down here, I said once we break out through this level, it really turns the odds in favor of the idea that wave 4 is complete down here and wave 5 is headed up. Just because of where that resistance was and the free move up to this area up here, which puts it really far up there. And you would have to kind of count this as an ABC here, which becomes really difficult because generally you could potentially look at this as an A, and this is an ABC as an expanded flat correction here. So A up here, B down here, and then C. But this C has to then be 5 waves, right? So how do you get 5 waves out of this? Well, you go 1, 2. But then how do you get 3 out of this? Because this is all overlapping. This is a diagonal. And wave 3s aren't diagonals, right? So how do you make this into 5 waves here? If you start here, 1 flat is a 2, and then you can look at it, however you want to look at here, 3, 4, and you get your 5 up here, pull back. I mean, you can make it work there, right? Let me see here. I just realized what I said. Because if this is a 1, 2, that can be, this would be a 3, 4, 5 would be 3 waves up, right? Well, that gets interesting there then. Let me see here. So this would probably be a 3, and this would be maybe a 4 is a triangle here, and a 5. A, B, C, D, E down here, maybe. But this is going to be 3. This low is going to be 4 down. This would be 5. So this has to be 3 here. Oh, there we go. 1, 2. I'm sorry. 1, 2. Nah, maybe that doesn't work there then. This is 3. It's right over here. Oh, yeah, that works fine. We're above. 3 would be longer than 5. So basically, you look for a 1, 2 is a flat. And then you get a 3 and a 4. And then you'd get a 1, 2, 3, 4, 5. Or even a 1, 2, 3, 4, 1, 2, 3, 4, 5. So then you have a 1, 2, 3. Here's your 4, and then you have your 5 there. So definitely possible on that. So, I mean, the count is still there, thank God. But yeah. But definitely a possibility there. But again, part of Elliott wave is zooming out and kind of looking at the overall structure, right? Because Elliott wave isn't about price. It isn't about time. It's about structure, right? And so, again, as things extend further into their retracement, like if this was to be corrective here, that's going to, it doesn't invalidate it as a possibility, but it generally tends to lead to more possibility that it's in this case bullish rather than a bearish counter trend, right? Does that make sense? So yeah, I mean, we could look at this as a 1, 2, 3, 4, 5. So 1, 2, 3, 4, and then 1, 2, 3, 4, 5 here. And so this drop here would make sense because you get a strong drop like this after a diagonal. So you've got your diagonal here with your 1, 2, 3, 4, 5, right? So when you have a diagonal, you expect this. Or if you have a diagonal to the bottom, you expect a strong rally up. Because the idea of the diagonal is that it's price is overlapping, right? So if it's going up and it's an ending diagonal, that supply is coming in heavier and heavier, and demand is losing its grip, right? And then finally, supply comes in strong and just wipes out whatever demand's there. There's no demand left to catch it as it falls. And that's why when you're getting a rally, when you're getting an ending diagonal, you'll usually get this strong reversal down, right? But the same way when you're getting a diagonal on an ending diagonal to the downside, so you get this this price action here that kind of starts falling up on itself here, right? And so it consolidates here. And like any other consolidation, the idea is that you're going to get an explosive breakout. In this case, you're consolidating because you're getting more and more demand that's overcoming the supply that's coming in until finally demand just pops and there's no supply left to slow it down, and it rallies right the heck back up as it breaks out. So again, this count potentially being something like 1, 2, talked about here with the previous resistance as support, top of the range here, breakout of the bull flag, all this stuff, the pivots, all that. So this would then lead you to this minimal wave circle 3 target up here at 77.9, which takes us above that all-time high, of course, right? Yeah, again, looking at this here, it gets you that simple pullback here, gives you this move up here. And so that gives us, this minimum wave 5 up here at 87,129. And I know I hear you guys just breaking hearts out here going, oh, man, really? That's all we're going to get? I mean, possibly. That's the minimum expected target. That's that 200% of wave 1 that we look for, right? However, again, if this is the end, right? If this is the end of this bull market, this run, Q4 here, usually what we get is this explosive move up now, right? And you get overextensions on waves 3 and 5. And that's where you can see 100,000, 125,000, 180,000, maybe even more. But don't trade as if you're guaranteed those, okay? We're not even guaranteed to get the 87,129 here if the count's correct. We're not even guaranteed to get that, right? We'll have to see how it plays out. But generally, all things held equal, price generally tends to reach wave 3 at the 1618 and wave 5 at the 2.0 extension of wave 1. So that's what we kind of look for, right? What I notice is a lot of traders these days, new traders coming to the market, especially crypto and Bitcoin, they want to be guaranteed that price is going to reach some astronomical number because people online are guaranteeing it. Don't listen to people that guarantee anything with price action, guys. There's never a guarantee of what's going on there. Again, you could be reading it incorrectly, and that won't show up until you get some larger kind of thing happening that shows you that you're wrong. Risk management's where it's at, guys, okay? Christopher, what's up, man? He says, I've been waiting for 19K, but yesterday when Bitcoin was up 4% while SPY was down 1, I bought a full Bitcoin at 43 and 2,000 HUT at 8.02, hoping for equilibrium to break bull as the alternative asset. You're interested in the correlation between SPY and Bitcoin or cubes and Bitcoin cubes. Again, my take on all that correlation is that it's all acting out in relation to the dollar. It's not that Bitcoin goes up or down because the SPY goes up or down. They both go up or down because it's risk on or risk off. And it's risk on or risk off because of what the dollar's doing. And it's not even really the dollar. The dollar is a symptom of what's going on. So if the economy is tilting to the downside, it's going to show up in dollar strength. And as dollar strengthens, it creates a risk-off environment, which means the cubes, SPY, Bitcoin, all that, generally should head down. But again, we're talking about much larger time frames here, not daily time frames going on with that. Though you could sometimes see those knee-jerk reactions. If there's a sudden thrust in the dollar or a sudden drop in the dollar, you'll see it materialize as the opposite in your risk-on assets. But as far as overall, these larger price targets or whatever, you're talking about larger trends. And sometimes people are like, oh, well, the dollar's rising. And really, if you zoom out a bit, it's just going sideways. It's rising within a sideways range. And so that's not the same thing as, rising on that time frame as a trend. So, yeah. Is it possible to email me a chart idea that you've been looking at? Yeah, you can email me at christopher.inks@texaswestcapital.com. So it's Christopher, CHRISTOPHER.INKS at TexasWestCapital.com. Or, you can join the free side of our Discord there. You can get the link there off my Twitter profile. At the top there, it says join us, this Discord link up there. And you can DM me. Sure, I'll take a look at it. I don't mind. Anyway, guys, I'm really over here. Going on this about 5% over. So I'm going to get going. 5% over? Probably not 5% over. Minutes, hours are not 100 minutes, are they? No, they're not. So we're closer to about 9% over. Anyway, I hope you guys have a really fantastic weekend. Again, guys, you know what? If you've got issues with my chart, I don't have a problem with you discussing it with you, especially in front of everybody. That's perfectly fine. But don't be pompous. Don't be a jerk. You can't send, your charts in the chat. I ask, if I ask you, I say, well, tell me what wave and what's wrong with it. And then we can delve into it. We can discuss it. That's fine. Maybe you see something that I don't. That's okay. I'm human. I can make mistakes. But if you're going to be pompous like that, and act like you know everything, whatever. I mean, it's that kind of lack of humbleness that keeps you from ever really advancing as a trader. Always have to be ready to for the possibility that you may be wrong. Okay? So hopefully, I think you guys get that generally. I don't know who that was. And I don't wish any ill will on them. I'm frustrated with them. One, because they didn't listen to what I said to do, how to do it. And then two, because they remained pompous afterward, which is very frustrating, when you're trying to look at something, right? So as always, guys, I've always welcomed it. You guys that have been following me since 2018, I've always welcomed other thoughts and other ideas and discussions. I definitely don't say I'm definitely right and you're wrong and that's all there is to it. I never do that. If there may be an issue that you think with account or with something else that's going on, or maybe something else that you think might interact with it to make something different happen than what I'm talking about, man, sound up. That's what this is about, right? That's why I talk to you guys all throughout the whole thing. That's what it's all about. Some people don't get that. I hope they end up getting it at some point, because it's an awful existence to live, to be that way. Life's too short, man. Right? So anyway, guys, I hope you guys have a fantastic day. Have a fantastic weekend, as always. You can join us at howtotradetowin.com. Keep your eyes out at texaswestcapital.com. Join the newsletter. We do a great, discussions about the macroeconomic stuff that's going on, help you understand financial terms and what things mean that are in the news that week. So that way you can be a more competent consumer of that news and help you with your trading as it goes on there. So you can join that the newsletter there. I gave the link at the beginning of the stream. You can also get with me there at TX West Capital on Twitter, and the link is up there at the top as well, right below the bio. I really appreciate you guys. Thank you so much, man. You guys are really great. You make this a lot of fun. I appreciate it. I'm going to get out of here. I'll be back Tuesday, 11 a.m. Central Standard Time, so hopefully you guys join in, all right? We'll prepare for the NFP numbers next week. Okay? Claudia, man, I'm glad you like the newsletter, man. I'll keep working on making it better. It's not where I want it to be yet, but I'm working on making it better. I hope you guys have a great weekend. Take care. And remember, the only thing you control in the market is how much you lose. That's it. Nothing more. All right? Take care, everybody.